Today, I'm going to tell you why MeetKevin is wrong and you should not just sell out of the market because you think that it's going for a downturn or you see a lot of red. Now, there are exceptions, of course, if you have borrowed a lot of money to make certain trades or if you need the money right now. But for the vast majority of us, holding your positions will always be superior because we cannot tell the future. And I'm also going to reveal a big loss that I've taken and why, had I known what I know now, I would still make the same decision. One of my personal biggest positions is Tesla, and just about a year ago, it was actually trading in the high 800s, and as of right now, as I'm recording it, it's in the low 900s. So from 1 year till now, it has essentially moved just about 5%. And if you are invested in the broader market, you are seeing a majority of your gains just evaporate overnight. And for some of you that have invested in more growth stocks, you are seeing actual red from a year ago. And nobody likes to see that. Now, the reason though you should not sell out is because losing is part of the game. It is the cost of playing this game. When we invest our money in anything else but cash, we are taking a bet, a calculated bet with different odds depending on what you're invested in. But at the end of the day, it is a bet. And in order to make money, you have to take a risk. Cost dollar averaging, constantly investing into the market, historically is going to make you wealthy. It's going to make you a lot better off than if you were just to hold cash. And you need to be able to go through the downturns. You need to be able to handle a lot of volatility depending on what year of certain market cycles we're in. And this is assuming that you have some basic understanding of the companies and you're choosing nice, stable companies that have a lot of growth potential. If you see that they're at a good price and you invest in them, that's it. That's the best decision you have to make. If you went back in time, you have to do it over and over again because you have to understand that anybody who's ever invested in the market has no idea what is going to happen in the future. It could seem so incredibly dire right now, just like it did right after February 14th and coronavirus was introduced to us. Remember what happened to the market. February 14th, the S&P 500 was at $3,380. And just a month later, on March 20, it was down to $2,304. Now that is an insane 30 to 40% level drop. On March 20th, there was no indication that things were getting better. And actually, if you look into the past, things got much worse for a very, very long time. But who could have predicted? Just a short 4 months later, in July, we were back where we were in February. And since then, we have hit a major bull run with the S&P 500 growing 20, 30% in just 1 year, reaching new highs every single month, all the while we were battling this pandemic. Knowing what you know now, does that even make logical sense that the market continued to grow even though we had all these inflation worries, even though the world has been shut down now still for essentially 2 years? Despite all these factors, the stock market just continued chugging along. If you gave these statistics of where the world was at to a person, they made that prediction that, oh yeah, the economy would just continue growing for 2 years through a pandemic, through global warming, through Russia issues, through crazy investments into cryptocurrency. That doesn't make any sense to me. And that should prove to you that nobody can predict what's going to happen to the market. You can make educated guesses, but even the smartest analysts and investors in the world, tons of them have been saying that the market will go up forever or the market is going to crash ever since 2014. We have people like Ray Dalio, we have Michael Burry. Constantly every year they're saying, I've never seen a market like this. A crash is imminent year after year after year after year. And now they are finally right. We can make all the guesses we want, but we don't know. But what can you do as an investor? And that's just to be responsible. It's just to do your research and invest money that you're okay with sitting on the sidelines for 10 or 20 years. The best thing you can do is to throw some money into an index fund and just forget about it. Don't remember that the money is there. If you're investing with money that you cannot afford to lose, is not quite investing, then that would be either you're trying to build a business, which is much higher risk, or you are gambling because you need to be able to churn that money faster. And that's totally okay, but you have to understand what the differences are. And that is why MeetKevin is wrong. But I did promise you that I was going to show you what had happened to me. So if you look at my TD Ameritrade account, I am down at $7,000 now, and that probably doesn't inspire a lot of confidence in you. But for a little bit of context, in 2021, I made $100,000 trading options, and you can see the video and proof. I'll link it here. So I know what I'm talking about, at least a little bit more than average. It's a brutal hit because I was betting on Tesla being higher than it was. I'm not going to get into my strategy right now. And essentially, Tesla has fallen. But the reason I'm able to sleep is because I understand that for me to have made $100,000 in 2021, I had to take a lot of risk. There is no doubt about it. And with greater risk, let me achieve this reward. So there is no way that I can make money on every single trade I ever made. And I made an aggressive bet that Tesla was going to be higher, and that bet turned against me, and it really, really hurt to essentially close a position for a loss that big. But going back in time, just looking at the information I knew, I probably would have made that decision all the same, because based on what I knew, which is I believe that Tesla's earnings come Wednesday are going to be really, really impressive. Just their future is brighter than ever, and I thought they were still undervalued. I thought the price was a little bit cheaper than where it should be because it's been trading sideways for a year. I would still make the same play. And you should think the same way too. This is, again, the cost of doing business. Once you have over 100 or 1,000 clients, somebody is going to be upset. At some point, somebody's going to want to return. Whatever business you are, it's going to break. You're going to have to pay money. And that is what we're experiencing right now. This is good. I'd rather it happen now you can deal with it right now versus the unknown future of what's going to happen or when is something bad going to cause it all come crashing. These mini little corrections are all opportunities. If you've been in the market long enough, and I've been in it for over a decade now, you will see these corrections, and they are normal and they are healthy. And just stay calm, breathe, keep working, don't quit your day jobs. We'll be okay.